Coinbase's launch of its Layer 2 network, Base, has been met with a bullish reaction from the Ethereum community. It is believed that this move by Coinbase is a massive vote of confidence for Ethereum. It could set a precedent for cryptocurrency companies and financial institutions to use Ethereum as the settlement layer. Ryan Watkins, co-founder of Syncrecy Capital, described it as a watershed moment in the Ethereum roll-up ecosystem. However, Gabriel Shapiro, general counsel of Delphi Labs, warned that this could potentially open the door to unwanted SEC scrutiny. It could also inflict collateral damage on the rest of the ecosystem. This article provides an overview of the Ethereum community's response to Coinbase's Layer 2 network Base. Many members of the cryptocurrency community, such as Ryan Sean Adams, have expressed that it is a massive vote of confidence for Ethereum and will set a precedent for other companies and financial institutions to begin using the blockchain network. Coinbase's large user base and partnership network, as well as its open sourcing of the Base network, will likely bring more block space demand on Ethereum. On the other hand, Gabriel Shapiro, general counsel of Delphi Labs, warned that this move may open the door to unwanted SEC scrutiny. He argued that a centralized Layer 2 network that trades a lot of potentially securities-related tokens or does a lot of DeFi transactions may attract SEC enforcement. John Deaton, a popular crypto advocate and attorney, suggested that a potential settlement between Ripple Labs Incorporated and the U.S. Securities and Exchange Commission could be reached. He proposed that the SEC agree in writing that the ongoing and future sales of XRP are not securities. This could be a win-win situation for both parties. However, the SEC would have to consider the precedent set by this decision in any future enforcement actions. This article provides an analysis of the potential settlement between blockchain payments firm Ripple Labs Incorporated and the United States Securities and Exchange Commission. Popular crypto advocate and attorney John Deaton shared a key condition that may aid a swift settlement between both parties, should the option arise. The condition is that the SEC agrees in writing that the ongoing and future sales of XRP are not securities. The article highlights the potential costs of a settlement on the part of the SEC, and how it could set a precedent for future enforcement actions. Bitcoin has been fluctuating above and below $24,000, with investors evaluating the U.S. central bank's monetary policy and jobs data. Bitcoin has surged 40% since the start of the year, and other major cryptos are remaining flat. Stocks rose with the S&P 500, NASDAQ, and Dow Jones Industrial Average gaining, while initial jobless claims for the week ending February 18 fell by 3,000. Positive funding rates for Bitcoin indicate that traders view the asset favorably, and are willing to pay a fee to express their bullishness. Crypto regulatory initiatives are increasing, with the SEC's recent actions shutting down centralization staking services. However, individual staking and decentralized staking services are not affected. This article provides a comprehensive overview of the current state of the cryptocurrency market and other related markets. It touches on the latest developments related to Bitcoin, Ether, and other major cryptos, as well as the performance of the S&P 500, NASDAQ, and Dow Jones Industrial Average. Additionally, the article provides an analysis of the recent jobs data and its implications for the Federal Reserve, as well as the implications of the recent surge in AI tokens. It also takes a closer look at the positive funding rates for Bitcoin, which indicate investor bullishness. Lastly, the article covers the latest developments regarding Kraken's stance on the SEC's crackdown, Coinbase's launch of its Layer 2 blockchain, Messari's restructuring, and the SEC's stance on Ethereum staking. Overall, this article provides a thorough overview of the current crypto market and provides valuable insight into the current state of the industry. The SEC has recently taken aggressive action against large cryptocurrency exchanges and custodians, including a $30 million fine imposed on Kraken. This has left many crypto investors concerned about the future of the industry. However, SEC regulations may actually help the industry by increasing decentralization and providing much-needed clarity. Ethereum's transition to a proof-of-stake blockchain has created an opportunity for individuals to earn rewards by running a validator node and contributing to network security. However, this requires more technical knowledge than many investors have. The SEC's ruling has forced individuals to pursue more decentralized options, such as running their own node. This will increase decentralization and network security, and stay true to the foundational principles of cryptocurrency. This article provides a comprehensive overview of the SEC's recent regulation of crypto staking services. It explains how the SEC's action has caused many crypto investors to be concerned about the future of the industry, but it also outlines how this could be beneficial for crypto, by promoting decentralization and providing much-needed clarity. The article also discusses how the SEC's ruling will force individuals to pursue more decentralized options when it comes to staking ETH tokens on the Ethereum network, ultimately increasing decentralization and network security. Overall, the article provides a balanced view of the SEC's actions, and it supports the conclusion that the regulations may actually strengthen the use case of decentralized finance and increase the network decentralization and diversification. Bitcoin's price closed 2022 at $16,529. It has since seen a 45.5% year-to-date gain, possibly due to the United States Federal Reserve's inability to curb inflation. Professional traders are currently positioned with an unusually high stablecoin BTC margin lending ratio. However, this is normalizing and options traders have a neutral risk assessment. Regulators have been applying pressure on the crypto sector. But, Bitcoin derivatives are holding up, potentially increasing the odds of Bitcoin price breaking above $25,000 in the short term. This article provides a comprehensive overview of the current state of the Bitcoin market. It looks at the 45.5% year-to-date gain and provides an explanation for it, citing the United States Federal Reserve's inability to curb inflation while raising interest rates to its highest level in 15 years. It also looks at derivatives metrics to better understand how professional traders are positioned in the current market conditions and how the Bank for International Settlements is applying pressure to the crypto sector. The article provides an in-depth analysis of the market and is a useful resource for investors who are seeking to better understand the current state of Bitcoin. The Ethereum NFT ecosystem saw a decline in sales volume of 28.53%. However, some collections like Pudgy Penguins, Killer Bears, and Valhalla experienced a surge in sales volume. The increase in sale volumes of these collections was attributed to an increase in buyer and seller participation. This article provides an in-depth analysis of the Ethereum NFT ecosystem, with a focus on the collections that experienced the most gains and losses in the last 24 hours. Bake, Mutant Ape Yacht Club, Make, Other Deed, and Azuki all experienced declines, while Pudgy Penguins, Killer Bears, and Valhalla collections all saw significant increases in their sales volumes. Overall, Ethereum NFTs experienced a 28.53% decline in sales volume, but this is expected to change in the near future.